Gold fell 1% while oil jumped 4%. That split tells you everything about the Fed's new mood. Monday, July 13th, 2026. Like and subscribe for daily market updates. Today's agenda: top story, market snapshot, macro and central banks, geopolitical status, commodities, crypto pulse, earnings/IPO and deals spotlight, closing summary. Up next, market snapshot. It's Monday, July 13th, and the war came roaring back over the weekend. The U.S. launched its fourth round of strikes on Iran in a week. Tehran declared the Strait of Hormuz closed until further notice, and President Trump shot back that the waterway is still open. Oil gapped higher, stocks slipped, gold fell, and yet Bitcoin barely flinched, holding near $63,800, while almost everything else repriced the shock. But the real drama is 24 hours away. Tuesday delivers a triple header of June inflation, Fed Chair Warsh's first testimony to Congress, and the big banks kicking off earnings season all at once. That brings us to macro and central banks. Coming off Friday, the S&P 500 closed at 7,575, marking a fourth consecutive winning week. The Nasdaq finished near 26,282, and the Dow settled at 52,637. However, sentiment shifted sharply toward risk aversion over the weekend. On Monday morning, U.S. stock futures dipped lower. Dow futures fell roughly 1/3%, while the Nasdaq 100 led the decline. The market reaction was driven by safe haven assets. Gold dropped more than 1% to approximately $4,070, and silver declined nearly 3% to about $58. This move reflected investor preference for higher Federal Reserve rates and real yields at their highest levels since 2008, which outweighed the traditional bid for wealth preservation during conflict. The 10-year Treasury yield ticked up to roughly 4.6%. Oil was a notable exception, surging about 4% as war fears resurfaced. Global Brent traded near $79 and U.S. crude hovered around $74. In Asia, semiconductor leader SK Hynix fell approximately 5% in Seoul, erasing part of its blockbuster Nasdaq debut performance. Meanwhile, the cryptocurrency market remained oddly still despite ongoing missile strikes. Bitcoin sat near $63,800, up about 2% for the week, even as tensions escalated globally. The entire tape remains coiled and waiting for Tuesday's opening session to determine direction. Which leads to geopolitical status. Everything routes through the Federal Reserve, and this week investors finally hear from its new chair directly. Kevin Warsh, who held rates steady at 3.5% to 3.75% in June and scrapped this year's expected cut, testifies before Congress on Tuesday, the same morning June inflation lands. That is the setup of the week. Warsh has called the Fed's internal debate a family fight between holding and hiking, and markets are pricing in at least one rate increase by December, with September still in play. The June inflation report, the inflation data, is expected to show headline prices cooling to around 3.8% from 4.2%, helped by the drop in oil during June, before this month's fresh spike. Here's why it matters for crypto. A softer number would weaken the dollar and ease yields, exactly the fuel Bitcoin needs, while a hot print hardens the hike case and squeezes every risk asset. Complicating it all, the oil that just jumped on the Iran escalation threatens to reheat inflation just as the data was starting to cool. Warsh's tone under questioning could move markets as much as the number itself. Here's commodities. The weekend marked the sharpest escalation since the war reignited. U.S. Central Command said it struck around 140 Iranian military positions on Saturday, then hit Iran again on Sunday, its fourth round of strikes in a week, in retaliation for an Iranian attack on a commercial container ship near the Strait of Hormuz, the channel that normally carries about a fifth of the world's oil. Tehran responded by targeting U.S. facilities across several Gulf states and most dramatically declaring the strait closed until further notice. President Trump publicly disputed that, insisting the waterway remains open to commercial traffic, and vessel tracking did show some ships still moving, though well below normal. Diplomacy is fraying. Iran has rejected fresh talks unless Washington first meets its conditions on Hormuz transit, and oil sales, even as Qatar keeps trying to mediate, and Washington's revocation of its waiver on Iranian oil takes effect July 17, a looming deadline that still gives both sides a reason to bargain. For crypto holders, this is the paradox of the year. The war stokes the oil-driven inflation that pressures Bitcoin through higher rates, yet round after round of strikes has failed to shake crypto's price, which is precisely the resilience the bulls keep pointing to. The low probability but high-impact risk remains a genuine, lasting Hormuz shutdown. Treat every fresh headline as fast-moving, and until confirmed, unconfirmed. On to Crypto Pulse. Oil ripped back to life on Monday. Global Brent crude jumped about 4% to near $79, and U.S. crude to around $74, snapping a two-day slide after the weekend strikes, and Iran's closure claim revived the Strait of Hormuz risk premium. It's a sharp reversal from just over a week ago, when crude had briefly fallen below its pre-war levels as shipping recovered. The strange part is what the classic safe havens did. Gold fell more than 1% to around $4,070, and silver dropped nearly 3%, because in favor of higher rates, Fed and real yields at their highest since 2008 outweighed the war bid. That's the market telling you it fears inflation and higher rates more than it craves protection. Longer term, the International Energy Agency still expects global oil demand to fall this year, the first annual drop since 2020, which caps how high crude can run once the fighting cools. For now, though, oil is the transmission wire, carrying the war straight into the inflation debate and straight into Bitcoin's macro backdrop. Then there's earnings/IPO and deal spotlight. This segment focuses on crypto markets, where Bitcoin remains remarkably steady near $63,800, up roughly 2% for the week, despite a fourth round of U.S. strikes on Iran and closures in the Strait of Hormuz. As one of few major markets open over the weekend, crypto priced this escalation instantly with little reaction. However, there is a significant shift. Bitcoin's correlation to the Nasdaq has turned sharply positive recently, causing it to trade less like a safe place to store wealth and more like a high-beta tech stock. Consequently, Tuesday's inflation print could impact prices similarly to how it affects the S&P 500. On the tape, Bitcoin recovered from a 21-month low near $57,700 at month start. Key resistance sits between $64,000 and $65,000, with support around $62,500 before testing levels in the 60s. Ethereum trades near $1,800, capped by technical ceilings, while facing challenges from a 20% staff cut at the Ethereum Foundation, though Vitalik Buterin's lean roadmap offers longer-term hope. Bitcoin dominance holds steady near 56% as the fear and greed index climbs to 30 from extreme fear levels. Flows remain critical. U.S. spot Bitcoin funds recorded 2 straight weeks of inflows led by BlackRock, recovering after June's record $4.5 billion outflow, although 2026 remains net negative overall. Notably, Citigroup recently lowered its 12-month price target to $82,000. Ultimately, market direction hinges on Tuesday's data release. Up next, closing summary. Earnings season opens with a bang on Tuesday, and it's a bank show. JP Morgan, Bank of America, Goldman Sachs, Wells Fargo, and Citigroup all report the same morning as the inflation data and the Warsh testimony, giving the market its first hard read on the consumer, lending, and credit health. Expectations are high. Analysts see second quarter the S&P 500 profits growing more than 20% from a year ago, a second straight quarter of 20% plus growth. Later in the week, the focus swings back to the AI trade, with chip bellwethers ASML on Wednesday and Taiwan Semiconductor on Thursday, plus Netflix and United Health. One quieter signal from Asia, SK Hynix, fresh off its record U.S. listing, slid about 5% in Seoul as investors trimmed high-flying chip positions, a reminder that even the AI winners are not immune to profit-taking. Finally, let's turn to closing summary. Step back and Monday looks like a coiled spring, a market holding its breath between a reigniting war and a make-or-break Tuesday. The single biggest risk is a hot inflation report landing on top of freshly spiking oil, a 1-2 punch that would harden rate hike bets and pressure stocks and Bitcoin together. The single biggest opportunity is a cool number that lets the Fed off the hook, softens the dollar, and frees crypto to attack the $65,000 ceiling. Between now and then, watch 3 things: the June inflation print, Fed Chair Warsh's tone in front of Congress, and the Strait of Hormuz, where any real closure would send oil and inflation fear sharply higher. It is rare to get inflation, the Fed, bank earnings, and a live war stacked into a single 48-hour window, but that's exactly where we are. If you want this map before every open, subscribe and we'll see you tomorrow for the main event. Bitcoin remains remarkably stable, despite escalating global tensions in Ukraine and Russia. The cryptocurrency market showed little reaction to recent geopolitical developments, maintaining its bullish momentum near key resistance levels around $69,000. While traditional assets face uncertainty due to the ongoing conflict, digital currencies continue to attract institutional interest as a hedge against inflation. Analysts suggest that until direct economic sanctions impact crypto infrastructure significantly, prices will likely stay resilient. Investors are closely watching for any shifts in regulatory sentiment or supply chain disruptions before making major portfolio adjustments during this volatile period of international instability. Thanks for watching Market Pulse Daily.